Okay, cool. Let's jump into it. Firstly, just having a quick look at gold. Gold sort of kicked on last night, as probably most people saw, and we took out that second price target that we were looking for. So you can see these ones if you go back to Friday's video and the analysis there, where we were just down in this. This is just that was pre to NFP. And obviously we were hanging around this 1820 zone. These were the levels we were looking for. We've obviously the market's agreed with us here. You can see that sort of as it came up here, bang, portion of the market sold off. You could call this a retest of the highs of this little sort of consolidation patch that we did through Monday, maybe Monday, Tuesday, the crossover there. This is on a 4-hour chart. But obviously, then yesterday's video was coming in, was consolidating just underneath underneath that resistance level, and we got that push through last night and took out that second price target for the short term. So took the bulk of the longs off as we sort of came into the second price target. Not quite sure what the market wants to do from here. As we said previously, we could see that obviously there was a little bit of selling action sort of coming through from this sort of like 75 to 79, 80 and change kind of area. And I think the market again is starting to grind a little bit to sort of think, okay, are we ready to sort of take it up through there, or are we going to sort of possibly even sort of see another sort of attempt to of profit, or another round of profit taking, they attempt to push it back down here? Because you've got to remember that sort of like, all things considered, without the war involved with it all, we were in a very, 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 very bearish kind of sort of shot down here. So I'm gonna even actually look. Let's have a look where we're at with the so where we are, just coming up on about 50% retracement of that last sort of drop off push down here. So, what I mean, we've still got definitely some nice targets up above here. I would start to sort of think that if we can sort of get above, certainly above these wick highs from on the way down, so above sort of 18, let's call it 1881, where I've got this sort of alert set up here, that's opening the door up for the next leg up. And the next leg up, if we jump down onto the lower time frames here, we can sort of start to sort of see that up around these zones here, where I've got it marked out with the resistance levels here, we've got this coming in line with the 61% retracement level, and then there was a little zone that it sort of flustered around here on the way down as well. You've got these little swing lows down here. Obviously, 1900 being a big round number. I think there's a lot of the market that would start to sort of shoot off from there. But what I'm sort of looking for is potentially a little bit of a sort of stuff around here. We got US data out tonight, CPI. So if I recall, I'll have a quick look now. The month on month, sorry, year on year, we are looking at a slight drop. So 3.7 previously, it's forecast to come in at 3.6. Depending on, I mean, it's not a massive drop off, but I'd say anything more in that direction down is going to be positive for gold. Just sort of like as it's sort of, not going to be sort of particularly strong for US dollar, and just having that sort of most of the time fairly strong sort of inverse relationship with the US dollar. If we get a low print with CPI, that's not going to be great for USD. Even as we saw last night, I think it was the PPI data out. What was it? Yeah, PPI was out last night, and also their building permits as well. So that was all very strong positive data, and just keeping in the same theme as I mentioned all through last week, all this positive data came out for US, and DXY takes off, and then literally within sort of 10-15 minutes or so it got sold into this time. So, you saw a little minimal drop down. So this was gold around that news data event, dropped down to 68 or something. But as you can see, it recovered and it just flew off and actually took out and put in a new high up to 77, which is slowly grinding back up towards now. So I think sort of like, if you get sort of data that is positive for the US dollar and the market is selling it at these levels, what's going to happen when you get something that's not so positive for the US dollar? You're going to get the sort of people that are selling off the back of the news, which would sort of be presumably not great for the US dollar strength. But you're also getting that portion of the market that are just selling it regardless. They're selling the rips. So, I mean, it pushes up and they're just using that as a chance to sort of sell off. So you're going to get a double whack. So I think if it does sort of play out, of course, all these are just my calls and you've got to back your calls. I could be wrong with it, but I would say that sort of like, if the CPI comes in low, it's not really sort of conducive to supporting any sort of future sort of rate hikes and that, which, for strength of the currency, they're not going to like. So they're going to try and sell it a little bit more. And if they're selling it, well, then you sort of start to think, okay, where's that money flow going to go? Well, the war stuff's still going on. People are still looking for the safe haven choices. Gold is typically a safe haven choice. It offers a very good risk to reward from these levels. I mean, you got to think it was only a couple of months back that we were up around that 2000 level. So, you know what I mean? Obviously, a fair shot off from that there. But I mean, not to say that everything repeats itself, but last time we came off this support zone at 1810, that first push topped out over 2000. And, this is in a daily, so that was over the space of, I mean, where we look here, this was like, and this is not including the further sort of pushes and that, this is just really that first push. That was a 12-day period, went up 11%, basically a $200 move. So not to sort of say that, it happened this time, it happened last time, it's going to happen this time. However, if you've got the technical stuff going for you, then you can add in some fundamentals. So, what I mean, obviously the war thing and that is sort of helping gold appreciate in value. If there's any sort of sniff of like a banking crisis or something, which was really the main driver around this zone over here last time to get gold up to those all-time highs, there's no reason why you couldn't get back up to those levels. I mean, we know we got some heavy sort of resistance levels. I mean, realistically, I've been saying for a long time that this is the confirmation. I know it's right up near the 2000 anyway, but back up above that sort of 1980, 1985 and change kind of area, that's the real big push there. And that's also coming in line with the 127 retracement from this last drop down. So, it's still early days in terms of sort of like this bounce, but it is looking like it's happy to sort of churn through a little bit further. Got a little bit of room to move in the daily RSI. So, again, if we can take out those wicks, I would say, you might get a little bit of sort of a pushback from this 1889 kind of area here, where we can see that was that sort of swing low resistance point, support point. So, you could expect the sellers, anybody who was sort of holding from around this area, maybe just sort of go, okay, look, time to get out here. But, certainly back up above sort of 1890, we start to have some okay looking things. We got the 1900, and then we got to start to think about this larger channel that we've been dealing with sort of coming down here, which really sort of, that I imagine is going to be coming in. You're going to have a confluence of a bit of this sort of horizontally area here, where price has obviously been supported a few times as well. So that'll be the resistance. You'll have the 78 sort of retracement. You'll have sort of this falling resistance of the channel. So I would say that this is an area that I'm pretty keen to sort of see what happens around, just because I think there's certainly still some more upside, but this is looking like it could be a pretty decent sort of little area for people to be sort of targeting before we see a little bit of a pushback. All this is predicated, of course, on the continued sort of push up, well, obviously, because the price has to get up there. And we've got some levels to get through before we get to there. However, I think that sort of, this is an area where I could sort of start to sort of think that, okay, if people are going to try and really short this and really sort of hammer it back down, like, I mean, you could short it from here, but if this is the channel that they're trading, you're in the middle of the channel. So it's a bit of a risky sort of thing to sort of, if you're trying to sort of short, if the section of the market's trying to short it from here. So if we can get back up to this sort of 1915, I'd expect a big portion of the market to go, okay, yep, let's try and drive this and try and get that sort of continuation with this sort of move back up here, and then sellers come in and then they try and sort of drive it back down to sort of continue this sort of further sell off. I think there's a better risk to reward for the sellers and the bears, not to necessarily jump the gun and try and hammer it from these levels. but to sort of like try and sort of get short up here. So what does that mean? It means basically sort of if you still want to sort of try and get long and buy this thing, there's still certainly money to be made, particularly for the, my style of trading. A lot of the markets or retail sort of style of trading, which is, shorter, choppy in and out, we're not looking to invest. As I said, it's not investing, it's trading. And certainly, we're at 1879. You've still got a, sort of 30, $40 move to the top side here. It's not going to go, I'm not saying it's going to go straight there, but, there's a chop and a change. But I would say once we sort of come into contact with this sort of falling resistance around this area here, this sort of 1915, 1920 kind of zone, I would say that's a good time for people to sort of start to be booking some profit if they're long and they're still holding on to it. Flip across on Aussie. I've got Aussie on a couple of charts with my things. So as I said in yesterday's video, I mean, we were starting out here. I can't remember where we were at the time, maybe 64.30 or so. And I was saying that, look, these, we're through this big falling resistance now. So this is good. You've done what could seemingly be called the back test of the breakout point. So if we drag it across here, that's where we broke out. As you can see, coming through the line. Always like a back test of the breakout point. One thing that I did notice as well with this one here, you see how it's just coming down just a centimetre underneath here, just to sort of like, I don't know, maybe drag in some shorts and that, maybe clip any of those sort of technical stops just before then sort of kicking on a little bit further. If we sort of flip onto a lower time frame, you can see it's having a little bit of trouble committing to this break move here. As you can see, it's sort of choppy through this zone here. So, what we want to sort of see, and actually that's just going back 1 second. This is what I was saying yesterday in the video as well, that, we're through the falling resistance. Now these horizontals, they're the ones that we want to sort of contend with, because as I said, you've got all these times where market hasn't allowed it to close over, and what do we get? Bang, it's clear sort of rejection from there again, and obviously sort of the same as these wick highs previously here as well. So in the short term, we want to get above that wick to see further continuation to the top side. Realistically, this middle zone here, I'm not too fussed about now. I feel that's been, it's a smaller zone. It's in my mind, it's been cleared out. So if you can sort of get above this wick here, we want to then be looking for a close up in this zone over here. If we can get a close up above sort of 57 on a daily, I'm going to take that as a big confirmation that we're doing what all these other candles weren't able to do. Every single time it got above the zone, it's been smacked down, and it's been smacked down hard. So it's only natural people are starting to go, okay, let's do this again as well. So we're starting to see, it's sort of pull back, profit taking from that little bit there. But yes, that's the area. As you see, I've got my sort of I've got my alert sort of set there just for the break of that wick. But realistically, above the wick is fine. But we've seen it multiple times. I mean, as it was moving up here, these are still technical higher highs, and it's still selling down. This was obviously a massive top wick here. So you know what I mean. It can still come up here. It can still break this wick, and then still obviously fail. The RSI looks like it's turning a little bit. This is on the daily. So we want to see realistically, we want to have the two-prong thing. We want to go above this wick. Obviously, you need to do that to get up here, but you want to see the close up above 64.50. I think once you can get that, I think the market's going to go, okay, look, something's coming along here. Let's see what happens when they start to close up here, because you're going back to start of September. So over a month since we've been, and this is obviously coming in a sort of bearish direction, but that's over a month since we've been able to sort of get a close above that area. So realistically, if we can start to get a close up above 64.60, I think the market's going to be going, okay, let's see what they've got to do here. And I think, like, realistically, there's going to be a lot of stops around this 65, 20, 30 kind of area up along here. So I think sort of like, if we can get the close up above, here's the first step, test of the 65, you're going to see a sell down like you have done here, like we have seen every other sort of time. and then we're going to sort of see what happens from there. But again, 65, 65.20, this big red zone here, this is the big breakout. What you want to do is you want to do what the other candles were unable to do. You know, every time it hit it, it sold down. We want to see it hit it. It could sell down a bit, but you still want to see that close and consolidation underneath that sort of resistance. So to show that, you know, the market's not taking profit, they're happy to sort of just, you know, absorb anybody that wants to be taking profit here, absorb it, build up some liquidity, and then sort of push through. So, yeah, interesting to sort of see where it goes from here. We've just had sort of DXY come online about 35 minutes ago. Small little gap down. It looks like it's trying to sort of close the gap at the moment. We had some low-level Aussie news out as well. I think it was like, let me have a quick look here. It was, yeah, the inflation expectation. So that's actually gone up. So it was 4.6 previously and 4.8%. So that's, you know, supportive of Aussie strength. So as DXY is sort of trying to close the gap, Aussie's really sort of maintaining and just holding. I mean, this is on the daily here, but if you flip across to the hourly, you can see realistically, we're just sort of churning back and forth. So there's a bit of a zone through here. Had a little drop down last night, again, sort of just coming down, take out anybody that was sort of like, you know, technical stops under these things. That's why you need to have your stops a little bit wider than, you know, 1 pip underneath. Okay, that's technical change of trend or whatever, lower low. But it's certainly sort of, you know, anybody there would be sort of kicking themselves to see the reaction as it came back afterwards. If we just have a look a little bit of, you've got a bit of a sort of, if you want to drag some short-term kind of levels, we can see it's sort of, you know, even though it's not making it easy and it's not flying through, it has come through this little sell down falling resistance. But again, so the first level would be this 25 to get above here. As we can see, this was a bit of a chop zone through last night. And yeah, then we can really sort of be targeting. But 64.45 is the breakout point for us at the moment. So this is DXY as it sort of continues to sort of stuff around this lower zone on support. So we've got the high time frame support here, and this is what I was saying yesterday. You put your stops, and well, not your stops, but I had my alerts and that just down underneath these levels, because first of all it sort of came down and there was a large explosion back up, and this is if we get down even lower on the 15. This was the reaction from the US PPI news, was it? I think last night. Yeah, US, yeah, PPI, which was seemingly strong with the building permits as well. Oh, no, sorry, the building permits are Canada. Okay, sorry, my bad. Anyway, regardless, point being is it was seemingly positive data for the US with the PPI, and it didn't even last 15 minutes. And it got smashed into and sold straight back down. I mean, gold only gave up, I think, maybe $3 or $4, $3 or $4 from its level. And then obviously Aussie, I think, sort of came down, as we just saw, sort of clipped that 64 handle and then sort of fired back up again. So, you know what I mean? Like, market is certainly still just selling into anything positive. And this is why I'm looking for something that comes out eventually when it comes out negative. I'm expecting a very sharp, fast move with DXY. Subsequently, obviously, we got this little bit of a push up afterwards, a bit of a sort of correction from anybody. And, you know, I mean, I was actually not awake through this period here, but, you know what I mean, the things that we watch gold, we watch Aussie, we watch copper, and we watch China, they all were fairly unfazed by this big sort of recovery, if you want to call it that. So, I would say that sort of move there is probably more euro-based, sort of euro weakness or euro correction, profit taking kind of thing. So I haven't had a look across at it, but I wouldn't be surprised if you flip across to euro, it would have been coming into some sort of resistance around this level as well. So DXY just on the open here, small gap down. It's still trying to hold this support level here. We're seeing a little bit of a megaphone setup. I don't really trade these things, but I do sort of mark them out because, you know, with 4 touches here, 3 touches here, for whatever reason, it seems to be respecting it quite well. So again, you know, if you're coming down, you could expect possibly that you get a bit of a sort of support from this level underneath, depending on sort of when we get down here. But it's certainly at the moment, it's trying to hold this support. I would expect possibly we get an attempt to close this gap and then sort of sell down if we sort of push up there because it's grinding a little bit at the moment, but it's certainly not sort of like coming back with some explosion like we've seen previously. Sometimes it'll close the gap and then it'll just fire straight back up, and that's always a possibility as well. But I would say potentially with CPI coming out tonight, expected to be a slight drop. Market might price that in a little bit, and at least sort of maybe not sort of be so much of a sell-off of the US dollar, but I would say probably certainly retard any sort of growth intraday with it. Of course, it could be wrong and this thing could explode straight back up here. But, if that happens, then, we'll trade accordingly with it. But still, if we go back out onto the larger sort of time frame, I mean, you got to think it's still way, way, way up the top end of this whole move. I mean, I'd be surprised if we even got to the 23 yet. Yeah, okay, here we go. So now we're starting to see something here. Yeah, so I mean, we haven't quite got down. We haven't even got to the 23% retracement yet, but you can certainly see around this zone, they're starting to sort of push it up a little bit, or at least not push it up a little bit, but they're starting to sort of like, you've got this doji here where they're sort of that market indecision kind of thing. Are we going to see continuation? Are we going to see a rally? It is finally sort of coming down to sort of oversold on the daily, so I wouldn't be surprised if it is due for a little bit of a reprieve and a little bit of a push up north. But certainly in terms of sort of how hard it has been running, and this also could be a back test of these larger zones here, which I think you can see better on the weekly. So again, these were the sort of heavy resistance, which would cause quite this significant sell down here. And as it popped through here, it's tapped into this top sort of zone up the top here, this top sort of higher resistance. This always could just be a back test coming down here as well before it, and at least another attempt. I don't think we're about to break this level of a 107. I would say, I wouldn't say it's a top, but I would say there's a chance that we sort of do a bit more of a sort of grind with about sort of, a week or two of back and forth around here. We need to sort of put in realistically, these lines are fine, but these are sort of lower time frames. As you can see, this is the little channel coming down here. We need to replicate this, or not replicate it, but we need to sort of see this form on a higher time frame. So we need to have another push up here, so then we can start to go, there's our channel. So when price sort of starts to come up, so many of these things, where are we? There we go. Yeah, we need to sort of see price appreciate at some level, at some point, to come up here to put in another high, because this high here is what will determine whether we've got a top short term or not, because it will rally. Like that's the thing. It's very highly unlikely that this is just going to melt down here. I would say we're going to get a rally at some point. The options then are that we either rally up here, put in what would be a lower high, and then we sort of push off down here, and then we can sort of start to go, okay, this is our channel, whatever it may be, boom, this kind of thing moving down. Or alternatively, we sort of get a push and it does rally and it goes up here. The two options then are that one, it hits this area again, we put in a double top and it comes back down, or we break through and on we go with the US dollar strength. So, nothing's confirmed as of yet. Certainly we're getting this cooling off period down here. But this is realistically, we're not even at the 23 yet. So this is profit taking area. This isn't sort of market saying, hey, look, we're done with the US dollar yet. I'm sort of leaning more towards this sort of scenario of a push up, put in a lower high, start to come down, break wherever these lows end up being, and start to see a continuation down. That's my sort of feeling. So I think we've still got at least another sort of rally in US dollar to come over the next couple of weeks. China still just playing that sort of head and shoulders. Not quite there yet. We can certainly see where the buyers are. this big green zone here. So it's just more of a waiting game. Realistically, it's just churning and grinding sideways. It needs something significant to get this moving at the moment. You know what I mean? There was actually a bit of China news out 2 days ago where they announced a whole heap of stimulus, which, you know, in theory, you would sort of think would be sort of a negative, because obviously, sort of more stimulus, more money coming in, quantitative easing, you know, it's diluting the currency. So, you know, just because you sort of print another billion doesn't mean, or, you know, 100 billion, they're probably the figures that they're more sort of talking and haven't actually seen. But, you know, just because you print another 100 billion doesn't mean your economy is worth 100 billion more. It just means every single one of those wans or yarns or whatever is worth a marginal bit less. So in theory, that should have weakened the yuan, and we should have seen this sort of push up to the top side. But I think the sort of the rhetoric and the thought now is not so much that okay, that'll be the impact of it, but the printing, the stimulus will spur on the economy, which will increase their figures, increase their GDP, increase their output. All these sort of factors help sort of compensate for um, their real estate market by really beefing up their sort of manufacturing side of things. And so once those bits of data sort of comes through, that'll be positive. So it's a bit of a shift in the sort of thinking, and the market will do this from time to time. It won't always sort of be like, well, you know, quantitative easing bad, quantitative tightening good. You know, these things will switch and chop and change, and this is why sort of people say, you know, you can't trade the same plan forever because it's not always the same. There's so many moving parts that sort of, you know, you're going to see something will work for a couple of months. And then, as I said, if you go by textbook definitions with a lot of these things, and you're seeing this with the US dollar as well at the moment, all these bits of data that are sort of seemingly good are actually bad for US dollar. Well, they're not necessarily bad, but you know the market's using it to sort of sell into these things. So you're not getting those typical sort of textbook reactions, and that's why you got to watch all these bits of data drop so you can see how is the market reacting to this every time. And that's why all through last week I was touting, saying sort of like, you know, we're seeing US dollar being sold into every single time, and that's why NFP offered such a great opportunity because it was just like it, and even we saw it again last night. So still, this is the zone to beat. I've gone through enough times all the price targets and thought and thinking about, excuse me, about these sort of points here. But yes, so still need to take out these lower levels, close down underneath the zone before we can sort of start to see a bit more of a further move to the downside. Copper, copper again is copper's really sort of just snoozing at the moment. It's broken this main triangle. It's come down here. Hasn't committed to the downside too much though. I mean, again, sort of down here. Let's call this one copper. Good night. You take out those lows, that's enough for me to sort of say that, you know, they're kind of stuffed. I mean, you could try to drag a couple of sort of channels through here. One. Whatever, sky blue, sounds good. And try to make some sort of sense of what's happening along here. Not a big fan of this, to tell you the truth, but very scrappy. But I would say that this could potentially be something that they're trading at the moment. So again, back up above 67, 67, stuck on Aussie 6 months ago, 3 months ago, above the 370 here, and then realistically, that's the big line there, the 380. If you can go above sort of 3,800, I think that's enough to sort of say, okay, yep, we're back in the game. But for now, it's really just sort of churning along, thinking what's it going to do. And this is again, this is because all these things that are going to tie in together. If we see China really ramp up and ramp up mainly their manufacturing, so if we can see their sort of export numbers going up, if we could sort of see, you know, manufacturing numbers going up, then I would say this is going to be something that's going to bolster copper, because, you know, copper is one of the most used metals. So, you know, as the demand's going up for this, well, people are, you know, pushing it up because, you know, they want to use it. So the price, and so the demand's going up, that means the price will appreciate. And when you do that when you're happy and you're feeling good, and you know, you're not doing that when you're scared that, you know, the economy and everything's about to blow up. You're not sort of going, hey, let's ramp up production then, when, you know, you think everyone might be out of money soon. You do it when you think everybody's okay, feeling a bit better. We've got more money coming in. We feel a little bit safer, more secure. And so let's ramp up production. Ramp up production. Copper goes up. Ramp up production. Well, okay, it's looking good. Aussie's going to appreciate as well. So that's how these things all sort of tie in together. All right, cool. That's about it from me for today.